Hey, what's up, stock compounders? Brad here. So today it's Friday. So we're going to be talking about the 10 stocks that Robinhood investors are buying. These are the most popular stocks that Robinhood investors are adding to their portfolios in the last week, the week leading up to June 19th. So let's just set this up real quick. This is a fairly complex spreadsheet here. I want to describe these columns. So this one here, super investors. Okay, this is the number of super investors according to a website, Data Roma. The number of super investors that own these particular stocks. Okay, and super investors, it's really a kind of a hack in terms of how to find great companies to buy, how to find great investments, to look at what the best investors in the world have bought recently, and just generally what they hold in their portfolios. So you can see how many super investors own these, top 10 stocks that Robinhood investors are buying. Now, these two metrics, earnings yield and return on invested capital, are the two metrics that Joel Greenblatt uses in the magic formula. Joel Greenblatt is a legendary hedge fund manager, just incredible returns for like 20 years. I think it was like 40% annual returns. He had to return investors' money because the fund was growing so fast. They just couldn't find enough things to invest in because the money was growing so fast. So this is essentially a measure of how cheap a business is, earnings yield. The higher the number, the better. 11% is pretty darn good. And then return on invested capital is a measure of how good a business is. And you can see here Apple off the charts. VIC is Value Investors Club. This means that, if you see a month and a year here, there was a write-up done. Someone submitted a write-up on this company in Value Investors Club. And they're just amazing write-ups to read through to really understand how a seasoned investor kind of breaks down an investment thesis for a company. So this is another thing I like to see if there's a company I'm considering buying. I'd really like to read those investment write-ups. And you can see here Tesla, Amazon, and Disney all have write-ups recently. So let's jump right into the top 10. So you can see the first and the third are related. UrbanOne. Now this is a multimedia company serving the African American demographic, and with everything that's happening with the protests, Black Lives Matter. It's a huge thing right now in our culture around the world, and there's people who are wanting to support these Black-owned businesses and businesses that serve the African American demographic. And there are actually two companies on here where that seems to be the case, where the stock has popped recently because they're owned by African American folks, and that's UrbanOne, which 1 and 3, these are just different share classes, and this bank here, a bank owned, African American owned bank. And I think the majority of customers that this bank serves are also African American. But anyway, this is really interesting here, this UrbanOne. You see the difference in market cap, 189 million versus 1.65 billion. Now, the interesting thing is the A shares and the Class A shares and the Class D shares only have one difference, the voting rights, okay? Class A shares have voting rights. Class D shares do not have voting rights. Now, most of the time, there's a very small difference in terms of share classes that have a difference in voting rights. But you look at this, and there is almost a 9 times difference in price here between the D shares and the A shares. And there's a really interesting article from The Street that talks about float and how float can be, a big factor in how quickly a stock price is driven up. And this is a perfect example because these shares are essentially the same ownership share of this business, UrbanOne. whether you own an A share or own a D share, you have kind of equal ownership in terms of, what you're going to get, how this business does in the future. You're going to reap the rewards the same if you're an A share versus a D share, financial rewards. So this is a great article. I'm going to link to this in the description. Here, there are two charts here for UrbanOne because the company has two different classes of stock, A shares and D shares. The only difference is voting rights. Both UONE and UONEK had a strong day Monday. But you can see the big difference was float. A shares, there's only 1.58 million A shares outstanding. D shares, there's over 38 million, okay? So, 25 times the available shares. So it says if you want to move a stock, you go after the one with the lower float. You go after the one where there's fewer shares outstanding and you can move the price much faster. Yeah, it's just insane. So check out this article. It's kind of scary what's happening with what's happening with Robinhood investors and how quickly they're moving these small cap and micro cap stocks. The next one, Ideanomics. You guys, I have no idea what Ideanomics does. This froze. Let me just fire that up again. I have no idea what Ideanomics does. I looked it up, and it seemed like every word to describe what the company does was a buzzword. So I just don't know. 357 million market cap. It's a pretty small company, not super small, not nearly as small as some I've seen with these Robinhood investors like Top Ships, this bank here, even UrbanOne D shares. That's pretty small. But I don't have any opinion about Ideanomics because I couldn't figure out what they actually do. They just have a bunch of buzzwords in their description. You can see there's a big move from low to high in 2020, an 8x approximate move. But let's jump down to number 4, Apple. We all know Apple, $1.5 trillion market cap company. I think it might be the second biggest company right now, maybe behind Microsoft. And you can see the price now, it's basically at an all-time high. Okay. Now, Apple is a great business, but one thing I want to point out here, obviously it's a great business. 11 super investors own it. There's a lot of people who recognize Apple as a great business. Now, the issue is a great business is not a great investment at any price. Okay. And I believe, at these prices, let me just see what the PE ratio on Apple is. Because, historically, the PE ratio of Apple has been fairly modest. So we're at like a 28 price to earnings ratio right now. That means, for every $28 that you put into Apple, you're entitled to about $1 in earnings. That is not what I like to see from an investment. You can see the earnings yield here pretty low, just over 4%, which is in line with a 28 price to earnings ratio. So while I love Apple, I do not love it at the current price. I'd probably need Apple to come down, pretty close to this low, maybe even lower than that, for me to get interested in kind of analyzing it. So, I can't tell if I'm more excited to see people buying Apple on Robinhood than I am some of these kind of long shots. At this price, it's just as scary. Well, it's not quite as scary to me at this price. I'd rather see people buying Apple at $350 per share than some of these smaller long shots like Top Ships and this bank here. But anyway, let's move on. Number 5, Tesla. Okay, Tesla, I've always a fascinating story. What's happening with Tesla is so much volatility in the stock. But again, we have a situation where the price is nearly at an all-time high. You look $9.99 today versus $10.25 is the high. Probably within the last week, it hit $10.25. There is one super investor who owns it. Incredibly low earnings yield, guys. I mean, most of the earnings for Tesla, investors know, is out into the future. They're not buying Tesla for the earnings today. Obviously, it's a growth company. People think it's going to take over the world, basically. And you can see that's built in to the price. There is a write-up in Value Investors Club. Check it out if you're thinking about buying Tesla. Also, Aswath Damadran, a professor at NYU, valued Tesla. He's the dean of business valuation, one of the best in terms of valuing businesses. I took an online business valuation course with him a couple of years ago. But he valued Tesla earlier in 2020. I think like $427 per share is what he came up with. So obviously that's less than half of the current price. So, I would buy Tesla at a certain price. It would probably have to be pretty close to this low here, this 2020 low that we hit probably back in March. I'd consider buying at that price. But at $1,000 a share, it's so far from me even being interested. Number 6 on the list, Amazon. You can see huge company. We all know Amazon. Again, nosebleed prices. Amazon near the all-time high. Obviously, with what's happening, the pandemic, Amazon hasn't been hurt too much by that. There's so many people shopping on Amazon since people can't really go to stores. It really accelerated, I think, the success of Amazon, the dominance. It accelerated the dominance of Amazon. But Amazon is 126 price to earnings ratio, guys. 126. That's just scary. I mean, it's hard when you look at the upside to downside ratio, when you're buying a company with a 126 price to earnings ratio. I mean, there's just so much more downside than upside as far as I'm concerned. So, a while back I had a price target of around 1,300 on Amazon. I may buy it at a little bit more than that, but still, I mean, we're 2,600. That's just crazy. This is actually the stock that the most super investors own out of any stock on this top 10 list. So everyone knows it's a great business, again, just like Apple, but it is at nosebleed prices right now. And there's a Value Investors Club write-up if you want to check that out. BYFC, again, African American owned bank, really getting a boost from what's happening with the protest, the anti-police, so much happening there. No super investors own it. It's too small. Anything under a $250 million market cap, it's just going to be too small for most of these super investors. Just won't move the needle in their portfolios. Ford. So Ford is a company that I actually valued, and I made a video about just over a month ago, May 11th. So check that out. You can see, it's hard to see, but basically the way that I valued Ford, if you're using a 10% discount rate, which means if you kind of have a minimum threshold of a 10% expected return in this stock, you just can't make the numbers work. You can't buy the stock at any price to make a 10% return work. So, I think it's the most owned stock on Robinhood. I'm pretty sure it is. I thought part of that was there's so many, when you use a referral link from someone on Robinhood, you get a free stock. And, a lot of the stocks that people scratch off that they get for free are Ford, because it's cheap. It's a cheap stock in terms of dollar value. And so initially I was thinking a lot of these Robinhood investors owned Ford just because they were getting the free stock and they weren't, getting around to selling it or whatever. But it looks like there's a lot of people buying Ford in the last week, which is, I don't quite know what to make of that. But, car makers, if we go into a depression here, which, the economy is pretty shaky right now. I don't think it would take much to really start feeling it in terms of the market, what the market's going to do. Car makers do not do well in a recession or a depression. I owned Fiat Chrysler up until, when did I sell that? Just in the last couple of months, I sold my Fiat Chrysler position because, it's a car company. And I just see, a long climb ahead for car makers. So I wouldn't touch Ford with the 10-foot pole. Really interested why so many people are buying it. Now, Disney. Disney is the one company on this list that I'm really intrigued by, especially at current prices at $115 per share. It's kind of the midpoint between the high and the low in 2020, but there's 8 super investors who own it. The earnings is really low just because of the recent hit, I think, with parks having to shut down. There is a write-up from November of 2019. I think there's a 4-year price target from this person who wrote it up. A 4-year price target of, I think, $400 per share. So they expect 4 years from now the price will be $400 per share. So, that's a pretty good return if you're buying today at 115 and you're at 400. I don't remember if it was 3 or 4 years from now, but if you're looking at Disney, check out this Value Investors Club write-up. Disney's really the only stock here that I'm seeing value in terms of great business for a good price. That's really all I'm seeing in this list. And then you got Top Ships, very small company, 100 million. Crude oil tanker vessels, they ship crude oil around the world. I just don't know much about it. There's obviously, it has a 12x move recently in 2020, and then it's up double kind of from the bottom. But, there's a lot of people interested in oil. I'm surprised there weren't any airlines in the last week. Every prior week, there have been at least 2 or 3 airlines. Seems like people are maybe, getting bored of the talk about airlines. I made a video recently on the airlines, how I think American Airlines has a very strong possibility of going bankrupt, the stock going to zero. So I was happy that there weren't any airlines in the top 10 this last week. But again, guys, this is just crazy. I think it's more crazy seeing this UrbanOne discrepancy between the A shares and the D shares. I think it's more crazy, possibly, than what's happening with Hertz. Robinhood investors driving up the share price of Hertz when it has filed for bankruptcy. So, wild stuff. This is why I love doing this every week. It's just really interesting to see what's happening, what's really driving these stocks each week. So, that's all I got, guys. Let me know if you're buying any of these and what you think of how Robinhood investors did in the last week. That's all I got. I will see you guys in the next video. Take care.